Have you ever placed a trade that felt right but still lost money? You followed the news, maybe the chart looked good. Your gut said, go for it. But boom, red candles, stop loss hit, another dent in the account. Frustrating, right? Now here's the thing. Trading isn't just about picking winners. It's about stacking the odds so high in your favor that even when you lose, you're still in the game. That's what this book is all about. Today, we're diving into High Probability Trading by Marcel Link, a pro trader who's been in the trenches, blown up accounts, and learned the hard way what actually works. This isn't theory, it's street-level trading wisdom. And if you've ever wanted to go from guessing to knowing what you're doing, this is your roadmap. Marcel Link opens the book with a brutal truth most people don't want to hear. Most traders lose money. Not some, not a few. Most. Why? Because they think they can wing it. They jump in without rules, without discipline, and expect to beat the market like it's a video game. Let me ask you, if you were going to fly a plane, would you do it without training? Of course not. But people open trading accounts and think they're the next buffet just because they watched a few YouTube clips. High probability trading starts by breaking your ego down, because unless you approach this like a serious business, you're going to burn out fast. Here's something cool Marcel Link talks about early on. He says every successful trader builds their edge on 4 pillars. 1. Education. 2. Discipline. 3. A trading plan. 4. Risk control. Sounds simple, right? But let's break it down, because this is where most people fall apart. 1. Education. This doesn't mean just reading books. It means studying charts, journaling your trades, reviewing wins and losses, and constantly testing what works. Marcel says, you can't expect to make money from something you don't understand. Would you hand someone $50,000 to build you a house if they've never held a hammer? Then why hand yourself money to trade when you haven't built the foundation? 2nd, discipline. Let me tell you the real enemy in trading. It's not the market. It's you, your emotions, your greed, your fear. Marcel shares how many of his worst trades came from breaking his own rules. He'd overtrade, chase losses, or jump in without confirmation, and it always backfired. Sound familiar? The lesson? You must become the type of person who follows through. You can't be half in. You either trade your plan or get out of the game. 3. A trading plan. This one is huge. Marcel says if you don't have a clear, written plan before you enter a trade, you're not really trading. You're gambling. Your plan should answer, when do I enter? Where's my stop loss? What's my profit target? How much will I risk? And here's a real gem. A good plan will keep you out of bad trades more than it gets you into good ones. Let that sink in. Sometimes the best move is no move at all. 4th, risk control. You know what kills traders faster than anything? Too much size. Marcel says if you're risking more than 1 to 2% of your account on a trade, you're asking for trouble. 1 or 2 bad trades, and boom, you're out of the game. He talks about how pro traders think like this. It's not about how much I make, it's about how long I can stay in the game. If that becomes your mindset, you've already leveled up. Let's talk mindset real quick. Marcel Link drills this in over and over. Treat trading like a business. You've got to manage overhead, your losses, protect your capital, like inventory, and focus on consistency, not home runs. Ever heard the phrase, death by 1,000 cuts? That's what happens when you treat trading like a hobby. A little mistake here, a small revenge trade there. Before you know it, your account is bleeding out. He gives a simple example. If you lose 50% of your account, how much do you need to gain to break even? It's not 50%. It's 100%. That's the math reality traders forget. So Marcel's rule: preserve capital first, make money second. You ever feel like the chart's messing with you? Marcel says a lot of traders lose not because their strategy sucks, but because they don't understand their own personality. Some people are better at scalping, others at swing trading, some thrive in volatility, others panic. He says your trading style has to match your personality. Otherwise, you'll always fight yourself. And here's a cool analogy he gives. Trading is like driving a car. Some people love fast sports cars. Others prefer SUVs. There's no right car, just the one that fits you. Same with trading. You've got to test different strategies and track your emotional response. What makes you anxious? What feels smooth? What drains you? Marcel warns about trying to go full-time too soon. He says you should treat your early trading like a paid internship, except the payment is experience. Most people want to quit their job and become a full-time trader after 3 good trades. That's like signing up for the Olympics after hitting 1 three-pointer. He says you have to earn the right to trade big. So start small. Focus on building habits, not profits. 1 contract, tiny risk. Master 1 setup at a time. When your process is strong, the profits will follow. But skip the process, and the market will humble you fast. First thing Marcel Link teaches: stop looking for perfect trades. Start looking for high probability ones. What does that mean? It means you're not trying to predict the future, you're stacking odds. You want trades that have a higher chance of working based on repeatable conditions. Marcel says, your job is not to trade often, it's to trade well. He compares it to being a sniper, not a machine gunner. And here's a cool checklist he shares. Whenever you're about to enter a trade, ask, is the market trending or choppy? Is there a clean support chart resistance level nearby? Is volume confirming the move? Does this setup match your tested strategy? If you can't confidently check 3 out of 4, you skip it. Simple. Let's talk about trade exits. Because here's a truth bomb. How you exit a trade matters more than how you enter it. Marcel Link says this is where 90% of traders screw up. They either exit too early and leave money on the table, or stay in too long, watching profits evaporate. So what's the fix? Have 2 exits planned before you even enter. 1, your stop loss. 2, your profit target. And get this, Marcel is religious about stop losses. He says once it's set, you don't touch it, ever. Unless the market moves in your favor, then you can trail it. A good stop loss is based on market structure, not emotion. So don't just randomly pick 10 points or 1%. Look at the last swing low, if going long, or high if going short. That's your buffer. And when it comes to profit targets, he teaches something powerful. Don't aim to catch the whole move. Aim to catch the meat of the move. Forget tops and bottoms. Your goal is the middle, the high probability part. You're not a fortune teller. You're a trader. Now this might sound weird, but one of the best trading skills you can learn is this: doing nothing. Marcel Link calls it sitting on your hands. And yeah, it sounds boring, but it's where the real magic happens, because most traders overtrade out of boredom. They can't stand watching the screen and not taking action, so they force trades. They start seeing patterns that don't exist. You ever done that? I have. And you know what happens next: bad entries, regret, and losses. Marcel says, no trade is better than a bad trade. So unless your setup is screaming at you, don't touch the keyboard. Want a pro move? Set alerts, walk away, Go for a walk, read a book, live your life. Let the market come to you. Trading isn't just technical, it's emotional warfare. And Marcel Link calls out 3 emotional traps that kill even smart traders. 1. Revenge trading. You take a loss and immediately try to make it back. Sound familiar? It's like doubling down at a casino. Your brain is on tilt. Marcel says this is the fastest way to blow up. His advice? After a big loss, walk away. Don't look at the screen. Don't open your trading app. Just stop. 2. Overconfidence. A few wins in a row, and suddenly you're untouchable. You increase position size. You start breaking your rules, and just like that, the market humbles you. Stay grounded. Even winning streaks are just variants. Stick to the plan. 3. Fear of missing out, FOMO. This one is brutal. You see a breakout, but you miss the entry. Now you chase. You enter late, it reverses, and you lose. Marcel says there will always be another trade. The market isn't going anywhere. So stop chasing. Patience pays. Section 5. The power of simplicity. Here's a big takeaway that shocked me when I read it. Most profitable traders use simple strategies. Support and resistance, trend lines, breakouts, nothing fancy, no magic indicators, no 15-screen setups. Marcel Link even says, if your strategy needs 10 indicators to work, it probably doesn't work. He recommends 1 or 2 simple setups, a clean chart, maybe 1 or 2 confirmations, like volume or RSI. The goal isn't to be flashy, it's to be consistent. Think about it. If a setup only works in specific market conditions with 9 indicators aligned, how often can you even use it? But if your setup works in most conditions and is easy to spot, you can repeat it. And repetition is what builds income. Track every trade, like a scientist. Marcel Link says most traders don't improve because they don't study their own behavior. You need to keep a trading journal, not just for wins, losses, but for why you took the trade, what you were feeling, whether you followed your plan, what you learned, and over time, patterns will emerge. You'll see which setups work best, what time of day you trade well, what emotions mess you up. It's like building a mirror that shows you exactly what to fix. So you've got the mindset, you understand risk, you know what a solid trade looks like. But here's the real question. Can you make trading your career? Can you actually turn this into something that pays the bills, supports your family, and doesn't make you want to rip your hair out during a losing streak? That's what part 3 is all about. Because high probability trading by Marcel Link doesn't just show you how to place good trades. It shows you how to build a career out of trading without going broke or losing your sanity. Let's get into it. Look, I know the dream. Laptop on the beach, 1 trade a day, making thousands while sipping iced coffee. But Marcel Link is crystal clear. Don't go full-time until your trading income consistently matches or exceeds your job income for at least a year. And even then, keep a cushion. He says most traders rush into full-time too early. They have a few good months, think they've cracked the code, and quit their job. Next month, market changes, account drops, pressure builds, and now they're trading scared. So what should you do? Build a solid savings buffer, 6 to 12 months of expenses. Prove you can trade consistently in different market conditions. Slowly transition, maybe part-time before going full-time. Marcel treats trading like launching a business. You don't open a restaurant with 0 savings and no customers. So don't do that with trading. Let's talk about position sizing. This is where traders either survive or spiral. Marcel Link teaches this simple rule. Risk 1 to 2% of your capital per trade. Never more. Why? Because trading isn't about winning one big trade. It's about being able to take 100 trades and still have capital left if 20 or 30 of them go wrong. Let's say you've got a $10,000 account. If you risk 1%, that's $100. So even if you lose 10 trades in a row, which can happen, you've only lost $1,000. You're still alive. But risk 10% per trade? 10 losses equals you're done. It's not sexy. It's not flashy, but it's how pros stay in the game. Let me ask you something real. Have you ever had 5 losses in a row and started doubting everything? Your setup, your skills, maybe even your future in trading? Marcel Link says, that's normal. Even the best traders hit cold streaks. It's part of the game. But the difference is, pros don't panic. They adapt. He gives 3 rules when you're on a losing streak. 1. Reduce position size. Cut risk in half. You need to calm the emotional storm, not fuel it. 2. Stop trading for a day or two. Step back. Reset your mindset. Don't try to force a comeback. 3. Review your journal. Go back and analyze, oh, did I follow my plan? Oh, was the market just not favorable for my strategy? Oh, did emotion creep in? And here's something powerful Marcel says. When nothing feels right, doing nothing is often the best trade. Write that down. Marcel says becoming a great trader is like building strength. You can't hit the gym once and expect results. You have to show up consistently, track progress, make small tweaks, recover from injuries, push through plateaus. Same with trading. At first, you'll make dumb mistakes. You'll miss entries, exit too soon, overtrade, get scared, take profits too early, hold losers too long, and all of that is part of the process. The key is you review, refine, and return. You don't quit the gym just because you had one bad workout. So don't quit trading because of one bad month. Your trading style, whether it's breakout, momentum, trend following, swing, is something you shape over time. You customize it to fit you, and eventually, it becomes second nature. It's not about being perfect. It's about shifting how you think. You're no longer hoping something will work. You're following a proven, tested process and letting math do its job. That mindset shift, that's when the real change happens. Marcel Link says something most new traders totally miss. Your job isn't to win all the time. It's to be net profitable over time. Let's say your strategy wins 60% of the time, and you make $300 on winners, but lose only $100 on losers. Even with 40% losses, you're killing it. That's why Marcel drills home the idea of risk-to-reward ratios. If you're risking $1 to make $2 or $3, you can afford to lose often and still make bank. So stop obsessing over being right. Start focusing on being smart. Successful trading is actually kind of boring. You wait. You follow the plan. You take the same setups over and over again. Marcel Link says, if your trading is exciting, you're doing it wrong. The market isn't a roller coaster. It's a slow grind that rewards patience and punishes adrenaline junkies. Here's something most people miss. Marcel Link says, your trading style has to match who you are, not just what you read online. There are several types of traders, and if you're forcing yourself into a style that doesn't fit, you're setting yourself up for burnout. Let's break this down. Scalpers love action. They're fast, focused, and hate waiting. Day traders want control. They don't like holding positions overnight. Swing traders have patience. They hold trades for days to weeks. Position traders are more hands-off. They ride long trends, often using fundamentals too. Ask yourself, do you panic when trades move fast? Do you feel trapped staring at charts all day? Do you overthink when holding overnight? Your answers reveal your trading type. Marcel says this is critical. If your strategy works but doesn't fit your personality, you'll sabotage it. So experiment, test, journal, and don't be afraid to switch styles if one drains your energy. Marcel says many brokers profit whether you win or lose. Their main incentive is for you to trade more, not smarter. Here's what to watch out for. High commissions eat into your profits if you're trading frequently. Slippage can ruin your risk-reward if your broker doesn't execute well. Over-leverage offers sound attractive but lead to quick blowups. He recommends choosing a broker with low spreads, reliable execution, and strong customer support. Avoiding platforms that constantly push you to trade more or upgrade to risky leverage. Your broker is a tool, not a mentor. You've got to take full responsibility for how and what you trade. Ever crushed it in paper trading, then failed with real money? Marcel Link explains why. Paper trading teaches mechanics. Real trading teaches emotions. When there's no money on the line, you're calm. You follow rules. You don't care about losses, but once real dollars are involved, the fear, greed, and second-guessing explode. That's why he recommends start paper trading to learn order placement, setups, and execution. Then trade real money, but very small size, to learn emotional control. Real growth happens after you feel the sting of a real loss and still follow your plan the next trade. Marcel Link says something subtle but powerful. Not every minute in front of the screen is meant for trading. Some of it is meant for learning. He advises traders to spend serious screen time just watching price action. How do markets behave after economic reports? How does volume shift during different times of day? How does your favorite setup look before it triggers? This passive study builds what pros call tape reading skills. Understanding the rhythm of the market. It's like watching hundreds of games before becoming a great athlete. You start to see patterns without even trying. So block time every day, not to trade, but to observe and learn. Here's a mistake Marcel sees smart traders make. They keep tweaking a good system until they ruin it. It's called over-optimization. You're constantly adjusting. Stop loss size, entry conditions, indicators, time frames. You're chasing the perfect setup, but it doesn't exist. Instead, Marcel suggests, pick a system with positive expectancy, stick to it, focus on execution and risk control, not constant changes, because a decent system, traded with discipline, beats a perfect system you can't follow. Early on, a lot of traders bounce between stocks, options, forex, futures, crypto. Marcel says this spreads your focus too thin. Master one market before you even think about another. Each market has its own volatility patterns, trading hours, economic triggers, risk characteristics. Start small. Get consistent with one product, like the S&P 500 or EUR/USD, then maybe diversify later. Don't be a jack of all charts and a master of none. One of the most powerful mental models Marcel teaches is this. You're not trying to predict the market. You're trying to trade when the odds are in your favor. Think like a casino. They don't win every game, but the odds are tilted slightly in their favor. Over thousands of plays, they always win. Same goes for trading. You don't know what this trade will do, but if you only take trades with a 60% edge, good risk, reward, and follow your rules, you win over time. That shift from "I hope this works" to "this is a high probability play" changes everything. We've said it before, but Marcel hammers it home again. Trading is a business of boredom. the best traders? Don't trade every day. Don't jump on hype. Don't talk about every move on social media. Don't even look that exciting, but they're consistent, they're process-driven, and they're still around years later while others disappear. Marcel says if your trading feels exciting all the time, that's a red flag. Consistency greater than excitement, process greater than prediction, rules greater than randomness. So if you're looking for thrills, go skydiving. If you want to build wealth, get comfortable being bored but consistent. If you found value in this breakdown of high probability trading by Marcel Link, do this. Like, share, and comment this video so YouTube knows it's worth watching. Subscribe to watch more videos.